if you're ever questioning yourself and you're like, Candace, is that a deduction? And you're asking yourself that, well, always ask yourself these two things. Hey rich friends, this is Candace, your revenue growth strategist, always showing you how to grow your revenue without using your labor. And today I want to share the top 5 deductions for business owners as they prepare for this tax season, making sure that they can grow their revenue, of course, without using their labor. And one of those ways of doing that is using tax strategies. When you use tax strategies, how do you grow your revenue? Well, if you're overpaying taxes, then that means that you're allowing the government to take more of your money than you're supposed to. So you grow your revenue by having tax knowledge and understanding that the tax laws can work in your favor if you understand them and if you take advantage of the tax deductions that you qualify for as a business owner. If you're not a business owner, well, you want to be one ASAP, right? So I want to share this information with you to make sure that you're aware of some of these tax deductions. There's over 450 tax deductions that we qualify for as business owners. Now, let's be clear. It doesn't matter if you have a home-based business, a small business, a large business, a business on the corner, whatever it is, right? Business is business in America. Let me be clear. There's 2 tax laws in America, one for the business owner and one for the employee. Now, with that in mind, the business owner gets all of that great tax benefits, over 450 tax deductions, but the employee, well, now it's only like 5 or 6 things that you can write off only if you don't have a side business. So I'm encouraging you to make sure you have a business. That's the first thing. But on top of that, let's talk about those tax deductions. At least 5 of them. 5 of the tax deductions are common tax deductions that you qualify for just for having a business. So let's talk about the first one. Your cell phone. You see, a lot of times people think, oh, well, it's my personal cell phone, I can't write that off. Well, the law says that if you have a object, let's be clear, that is used for partially personal and partially business, well, you can actually take that object or that item on your taxes for the business portion. The personal portion is just your, of course, regular expense. So this is how you're turning your regular expenses into business expenses, because now that cell phone that you were going to use anyway is now tax deductible. Even just a little further on that, when you get your business cards made, guess what? The phone number on that business card is normally your business cell or a number that links to you, right? And you need your phone to answer that actual phone call that they call on your business card. So I just want to make sure you understand how this works in your life. That's the first one, is your cell phone. And yes, your personal cell phone can be used partially for business purposes, okay? All right, the second one, your internet. Yes, your Wi-Fi at your home. If you have a home-based business or if you have an office space, the Wi-Fi is tax deductible. Yes, it is. And we know that you're going to be on there using your Wi-Fi for Facebook, right? But if you have a website, right, I want you to understand this. If you have a website, you need the internet to run your website for it to always be active and going. So guess what? Your internet is tax deductible. What's another one? Your auto expenses. Oh, this is a big one right here. And a lot of times people get it really mixed up. The reason I say that is because there's 2 types of ways that you can carry your auto expenses. Well, what are they, Candace? Of course. The first way is mileage. We call it the standard mileage rate, or that deduction basically says that you can write off the miles that you drive every time you drive for business. So let's say you drive from your office location, from your home to your customer's location. Let's say you did some mobile work. Well, those miles to and from that location is tax deductible. Remember, it's round trip. So anytime, let's be just very clear, anytime you drive your car for business, that is a tax deduction for you, okay? Very important. All right, so that's the first way, is the standard mileage rate. Well, a second one is the actual method. There we go. The actual method is when you take your lease payments, when you take your insurance, also your gas and oil changes and tires, all those things that you get done to your car, guess what? Those can be tax deductible if you take the actual method. So you have to choose between the 2. You can't necessarily take both. Although you do need mileage, you need to know your mileage for the year in order to, do your calculations, or your tax professional to do it properly. But let's be clear, you get to choose mileage or actual expenses. Now let me give you one other tidbit, because this is the area I told you was kind of complex here. let me give you this extra tip. Remember, if you start a business in 1 year, and you start that business and you actually use the actual method, which is your gas expenses, those things, right? If you use the actual method in your first year, you have to continue to use that method with that actual vehicle that you started with. If you use the standard mileage rate or that standard mileage method, well, guess what? You can flip-flop each year back and forth. Now, you choose what you want to do. I hope you got it. You choose what you want to do based around your situation, but either way, you need your mileage, and you can only choose one, standard or actual expenses. Either way, it's your choice, but this is a common tax deduction that you can file on your taxes, which is going to be great. What's the next one? Meals, number 4. Meals. Yes, you can write off meals if you go and you do a presentation or you're not entertaining. Let's be real clear. Entertainment is taken off of the actual expenses from here on out. The new tax law says you cannot write off entertainment. But if you were to take a customer out, let's say you took them out to lunch because you all were going to talk about the services that you were going to provide for them, that meal is a tax deductible expense, which is awesome, right? So make sure you be smart with your tax deductions. I will say that. All right, let's keep going. The last one I'll give you for today, and this is not the only ones, right? Remember, we qualify for over 450 tax deductions, but I'm giving you the top five common tax deductions. These things you do every day, right? All right, your membership fees. Yeah, so if you have, let's say you're part of an association that's related to what you do. Let's say you pay for YouTube TV because you watch a lot of education videos on YouTube. Got it. What about documentaries on your Netflix account, right? Do you watch documentaries that help you to grow further in your business? Like different documentaries. I like the one that they call The Men Who Built America, right? It's very interesting concept, but anyway, it's a great one. I often look at it to see how business was built back in the day because some of those principles are good for today. So what am I saying? The membership fees that you pay are tax deductible. Make sure you're writing them off. So I wanted to come to you real quickly and make sure you understood that as a business owner, you qualify for over 450 tax deductions. If you're ever questioning yourself and you're like, Candace, is that a deduction? And you're asking yourself that, well, always ask yourself these two things. Is it ordinary and necessary? It have to be both. Well, what do I mean by that? If it's ordinary, that means that that expense could be used in another person's business that's similar to yours. They would write that same expense off. And it has to be necessary. That means it's technically needed in order for you to run your business properly, right? In order for you to have it and have a sustaining business. So the IRS wants to do us a favor. They want to help us by saying, you know what? Because you're building revenue in America, we want you to have tax benefits for helping us to grow the revenue in our economy, and we thank you. So from the IRS, they tell us to do it, so we have to follow the rules of the game. Right? And when I always use this example, if you don't know the rules of the game, that's the same thing as going to a basketball game with a football. You look crazy, right? Thinking that you can shoot it in the hoop. But anyway, the thing is you have to know the game, know that as a business owner, you qualify for tons of tax deductions, over 450 of them, and we need a business in America. And those are your top 5 tax deductions that you can qualify for that are very common: your cell phone, internet, auto expenses, meals, and membership fees. Those are all tax deductible for you. And of course, there's hundreds more, but you can get that on another video. And I look forward to seeing you all soon, rich friends. Make sure you remember, if you need some assistance, to contact us, 501-613-7423, and we'll see you soon, right? On the next video. Make sure you subscribe right there at the top. And yeah. This is Candace, your revenue growth strategist, always showing you how to grow your revenue without using your labor. I'll see you all soon.